hope you're doing well. In the absence of a cut data video for the weekend, we're going to look at technical pitchforks, and it won't have stop loss clusters, and it won't have the order book. It won't show you the ratios. It's just purely technical. And what's quite interesting about this, the cut data, the CFTC website's been hacked, and for 2 weeks now that we haven't been able to get that data. So it's a little bit strange, a bit ominous, and there's also stuff going on in the world as well we have to be aware of. There's geopolitics, and then we've got the that unidentified flying object in Canada that got shot down on the weekend. So lots of crazy things going on in the world, and regardless of that, we'll just look at technicals. It might be that it's going to be like a flight to safety on Monday, where the dollar probably might appreciate. So we have to remember like some macro stuff. But just looking at a purely technical view, we've got an ascending channel here, an AU, which hopefully is quite clear. So let's draw a line, trend line, and we can grab that. It should really snap to it, but hey ho. And then we know that's obviously resistance. This is going to be support. And you can see where we closed. Those wicks there. 69.11 is basically dead on that line. Okay, so that's obviously very important. Below 69.11, we'll target 68.93, and you see how we've got some resistance support here, the 50%. Okay, below that, then we'll probably target the 61.8. And no doubt there'll be loads of stops down there as well, because retail traders will have their stops below the low, and that's a significant swing low. So you'd have your stop there. So it's possible a break of that, raid those stops, and then potentially a bounce. And don't forget we've got the CPI on Tuesday. So we've got all this stuff going on in the world right now, and then we've got big macro data to contend with. Likewise with the same with AU, we're creating this ascending channel. However, EU has broken. So we can do this. I don't know if you need me to do these lines, but it might make it a bit clearer. Basically, this is the shift channel. That's the top. This is the lower. And we know 107.08 is a good level because it's a 61.8 as well on that leg. Okay. And so it's a double resistance. Because of that, 105.06. But obviously you want to check your stop loss clusters and you check the sentiment indicators and things. But GU and AU and EU were sell sentimentally. They're long. Yeah, they're long. They're long on all of those that I just said. They're long dollar CAD as well. But we'll talk about dollar CAD next. So yeah, bear in mind 107.08 is a key level. Okay, you see what's happening here is that you probably want to avoid dollar CAD, because ideally what you want to do is trade something that's trending. You don't really want to trade something that's ranging. And you can see how we're like we are not really formulating any particular direction. We've got a big ascended pitchfork. Now we've got like a lower low, a lower high, which is bearish, which is an ABCD. Probably okay if you're doing 5-minute, 15-minute scalps. You can make quite a lot of profit on this, but I wouldn't want to be swing trading. 13443, 13304, and it's a big, huge gap between resistance and support. Personally, I would avoid this one, and it's obviously keep an eye on the CPI on Tuesday. So that's not exactly a great example, but it does tell you to be careful and just to trade, trending markets. Not when it's ranging. It's impossible to trade, unless you're scalping it, I think. Let's look at dollar Swiss. Now, unlike dollar CAD, this is actually, we can say this is trending, and it's trending down. You can see, we've got this descending line. Ascending channel, big distance between resistance and support, 300 pips. So it's looking like it's going down. Eventually, it should be because of the sentiment. Let's look at dollar Swiss, which is down here. They're long, 63% long. So we should be coming down. They were really, really long, and they're capitulating as it's fallen. So obviously it's a big squeeze. They were, this is like a bull squeeze. Let's zoom out a bit. Maybe that's a bit better. So we, fairly bearish. We're sort of trending down, aren't we? Probably going to do well on the CPI. Possibly do well on Monday because it's these risk events. It might boost the USD. So you have to remember the fundamentals. But from a technical perspective, we know we're trending south, and we've got resistance there and supports. It's going to get a bit ugly if we break 90.42. Zoom out. Got another line up here. Let's delete that. Yeah. So that needs to hold. 90.42 could be a good short. But below there, you can see there's nothing much on the left. And dollar yen. So let's zoom in. Well, you can see, we've got a descending shift channel, but an ascending pitchfork. So 135.52, 129.27. Zoom in, and yeah, it looks. We've got an ABCD, so a lower high, a lower low. So it's bearish. Obviously, it did fall since a lot. It's fallen a lot since there. What to say about this? Perhaps maybe a break 129.24 to target 126. We could break 126.69, but then we'd come there 126.32. Could get really ugly if we break 126.28, and we could go into like a freefall mode. We've got to remember the Bank of Japan have got their new governor. It's going to get released. That news will be released on the 14th. So for cross yen, you'd want to really try and avoid it. It's going to really bounce. It's going to move a lot, especially if he leans ultra dovish or ultra hawkish. It's going to impact the yen. So some levels there to contend with. Try and avoid stuff that's sideways, and try and trade it when things are moving, in a direction. It's a little bit tricky with the dollar yen. You can see how we bounced a bit here. So potentially 129.27 might hold for 135.56. And just to remember on the tickers, you can look at the currency pair and its bias. Dollar yen is up, and there's your long target as well, 134.64. Okay, so that's how you can use it. 134.64. Yeah, that seems like a decent trade, doesn't it? It's up there, and that's where the break even is. And that's where you want to target that. So you can use those levels, mark them off on your chart. If you've got a bearish bias, you'd want to be targeting all the way down there, 127, because that's the bears break even, and that's how you use it. So this is updated every 15 minutes. The price is updated every minute. That's that. So bit of a crazy week ahead of us, so just be careful. Potentially avoid yen until the governor is announced, and then it's going to be a big mover. Up until then, it's going to be chop, and we might see some flight to safety in the USD because of these geopolitics and things that are going on in the world. We had that missile strike that hit Romania and Moldova on Friday, and now we've got UFOs flying around in Canada that got shot down, which has been confirmed by military intelligence, and Biden is aware of it as well. So it's all a bit crazy. So it might be seeing a flight to safety in the USD. Be careful yen. Definitely be careful dollar CAD, because we're just chopping, and we're going to see a big move on Tuesday as well. So no trade of the day tomorrow, and there won't be a trade of the day on Tuesday. We'll probably look at a trade of the day on Wednesday. All depends on how crazy Tuesday is. So just trade safely, and I'll speak to you guys soon.